Let me welcome you to African Motifs. Let me welcome to Medzone African Motifs, whereby today we are going to be on accounting grade 11. We are going to be on accounting grade 11, whereby we are going to do term 2 revision of our accounting grade 11. So that is that. So we are going to prepare ourselves with the question paper that was written in Limpopo. So this question paper was written in Limpopo in 2025. As we can see that it is task 04 June exam, term 2 2025 question paper. So let us be together from the start of this presentation and to the end of it. So the questions that you're going to be looking at on this presentation, we are going to do question one. We are going to do question one. So on question one, you are mainly going to look at 1.1 to 1.2. So these are what we are going to do together in this presentation. So without wasting much time, let's quickly go to the question. So here we are on question one, whereby we are going to do bank reconciliation. We are mainly going to do what? Bank reconciliation. We're going to look at bank reconciliation. So 1.1 is all about concepts. It's all about concepts. So the question now says, state whether the following statements are true or false. Write only true or false next to the question number 1.1.1 to 1.1.5 in the answer book. So that is that. So the first statement, which is 1.1.1, says a credit balance on the bank statement reflects positive bank balance. So now we want to know whether this is true or false. We want to know whether this is true or false. So the answer there is true. The answer there is true. That is that. As we know that um, as we know that on the bank statement, good people, a credit balance means the bank owes the business money. So the business has money in the bank. That's what it means. For example, if your bank statement shows plus 5,000 credit, what does that mean? That means the business has 5,000 in the bank. That is positive balance. So the correct answer there is true. Hope we are together on that. Now moving on to 1.12. It says all payments made by EFT, not incur charges, do not form part of bank charges. So it says all payments made by electronic funds transfer, EFT, will not incur charges and do not form part of bank charges. That is false. That is false. It is false. It is false because EFT can have charges. EFT can have charges. Even though the EFTs are electronic, banks may still charge a fee per transaction. So that is why we are saying it is false to say they do not form part of bank charges. It is false to say that. For example, you pay a supply 1,000 via electronic funds transfer. The bank charges a 5 rand fee. This 5 rand fee is a bank charge. So hope we are on one page credit levels as we are moving to 1.13. 1.13 says interest debited on the bank statement will be recorded in the cash payment receipt journal, that is CRJ. So that is false. It is false. Interest debited is not in cash receipts journal. So that is what we are saying. It is false. The answer there is false because we are saying interest debited is not cash receipt journal. Interest debited means money is taken from your account. So it is an expense. So it goes to the cash payment journal, not cash receipt journal. Let's make an example of this where we are talking about interest. Bank charges 200 interest on overdraft. Money goes out. And as money goes out, this is going to be recorded in cash payment journal, not cash receipt journal. That is what we are saying. The answer there is it's false. So now let us move on, good people. Now we are on 1.14. 1.1.4. A bank reconciliation statement should be prepared every 2 months. A bank reconciliation statement should be prepared every 2 months. So that is that. So the answer there is false. Must be monthly. It is false. Because this must be monthly, not every 2 months. It must be monthly. So bank reconciliation must be done every month to quickly find errors. So you cannot do it after 2 months. You don't have to delay to detect or try to find out the errors. So you do it every month so that you quickly find errors. So that is that. So, because for example, if you wait 2 months, a mistake like 1,000 missing may be harder to trace. So it's very important that you do it monthly, not every 2 months. So we'll be together on that. So the correct answer there is false. So let us move on to 1.1.5, which says an internal auditor will want to inspect the bank reconciliation statement at the end of each month. So the correct answer there is true. The correct answer there is true. Auditor checks monthly. The auditors checks monthly. So the correct answer there is true. The internal auditor checks regularly to ensure no fraud or mistakes. For example, if someone steals money using EFT, the auditor can detect it during the monthly check. So these are our answers for question 1.1, our true or false. So let us move on, good people. So now we are on internal control 1.2, internal control. So with internal control, the question 1.21 says, explain why it is important that business prepares bank reconciliation statement. Provide 2 reasons. So now let us go to our answer book for that question. So before we can go there, remember that on our concept now we do have what answers. Like we have said, the first one, remember we have said it's what? The first one was true. And the second one, 1.1.2, it was false. And 1.13, it was false as well. And 1.14 as well was false, while 1.1.15 was true. So this is that. So now we are to answer 1.2, the question which says we are to explain why it is important that business prepare bank reconciliations statement. Why do we prepare bank reconciliation? What is the reason behind that? So we do that. The importance of bank reconciliation is to detect errors and fraud. Is to detect errors and fraud. Is to detect errors and fraud. Meaning to say, we are going to compare bank versus books. So this will help us find differences. For example, book shows 10,000, bank shows 80,000. So it means now we're going to look at the difference. You know, when you're saying 10,000 minus 8,000, you're going to get 2,000, which will be the missing. So the 2,000 missing, that is a possible error or theft. That is one of the reasons why we do prepare bank reconciliation statement to detect errors and fraud. One another reason again is to identify outstanding items. It is to identify outstanding items. Outstanding items is to identify outstanding balance. So this shows transaction not yet recorded by the bank. So those are outstanding items. So this shows transaction not yet recorded by the bank. For example, you deposit 5,000 today, but bank only records it tomorrow, and this appears as outstanding deposit. So that is what we are saying is to identify outstanding items. So hope we are together. We are very together on that. So let us go to another question. 1.22. What does the abbreviation EFT stand for? Abbreviation EFT stands for. What does it stand for? That is what we are asked to answer on question 1.22. So that is electronic funds transfer, meaning that is the money is transferred electronically between accounts. So we are saying this is electronic funds transfer. That's what this abbreviation stands for. Meaning we are saying money is transferred electronically between the accounts. You pay supply using banking app instead of cash. That is an EFT. Hope we are together on that. So now let us move on to another question. 1.23. Let us be on 1.23. 1.23 says, list 4 advantages of internet banking. List 4 advantages of internet banking. Let us be on on our answer book. List 4 advantages of internet banking. Advantages of internet banking. So the first one is that no queues. There are going to be no queues. No queues. So we are saying no queues. It means it's time saving. Means is internet banking is time saving. It's time saving. For example, you pay electricity from home instead of going to the bank. So that is time saving. That is one of the advantages of internet banking. So another one, it is safer. It is safer, meaning less cash. Meaning less cash. So instead of carrying 10,000 cash, you transfer it online. That's the advantage of internet banking. So another one is about immediate payments. Immediate payments. Immediate payments. For example, supplier receives money instantly after you send it. After you send the EFT, electronic funds transfer. That is that. So another advantage is that it's convenient. It is convenient. It is convenient. So meaning it's 24/7 access. It is 24/7 access. You can pay accounts at night or even on weekends. So these are the advantages of internet banking. These are the advantages of internet banking 1.23. So as you can see, we're supposed to just write them like this. As we are given space here, you were to write them like I've said, no queues. So here we have said it is safer. As we have said, less cash. So here you know very well we're talking about immediate payments. So you've already talked about that. Immediate payments, and then we have convenient. We have convenient. So that is that. So now let us move on to another question. Let us be on another question. 1.24. 1.24 says the bookkeeper has been assigned the duty of processing and controlling all electronic funds. Provide two reasons why the internal auditor should be concerned about this. Why is he going to be concerned about this? So that is that. So now we are to go to our answer book. Let us go to our answer book and answer that question. 1.24. As you remember very well that it was about us to provide two reasons why the internal auditor should be concerned about this. As we know, the statement says the bookkeeper has been assigned the duty of processing and controlling all the EFTs. And then we have to provide two reasons why the internal auditor should be concerned about this. One reason is that no division of duties. No division of duties. No division. No division of duties. Meaning to say one person does everything, no checking. So that is why the auditor is going to be concerned about this. For example, a bookkeeper makes payment and records it. No one verifies if it is correct or not. So that is the reason why our auditor is now concerned about that. So another reason can be risk of fraud. Can be risk of fraud. Risk of fraud, meaning to say a person can misuse money without detection. So that is why he or she, the auditor internal, is concerned. For example, bookkeeper sends the EFT to their own account and hides it in records. So you see, that is why we're saying risk of fraud. So this is the end of this presentation. Make sure that you make use of this presentation as it is very helpful for you to prepare for the coming term 2. Thank you very much for your time. I thank you.